Hi everyone, welcome to the Timing Research Show for July 18th, 2016. This is the 95th episode of the show, and today we will be talking about the 147th weekly report. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any past report there. My name is David Kosmeter. I'm the creator of Timing Research. And today I have Dave Landry back to host, so I'm going to go ahead and turn it over to him.
Okay, thank you, David Kosmeter, and thank you to Timing Research for having me back again this week. Looks like we've got a pretty full lineup here. Cameron, let's go to you first, veteran of the show. Tell us a little bit about yourself for those of us who don't know you, and tell us a little bit about, is that a new website, TradingWorks.info?
No, it's not. It's not really a website, it's my email, but my name's Cameron Yost, and I am with TradingWorks. We are essentially retail traders trading options right now, and that's where I am. I'm not. We're not selling any or promoting any particular newsletters or indicators or trading ware or any of that right now. We're just looking at a lot of things and actively trading.
Oh, cool.
So that's where I'm at right now.
Okay, cool. All right, John, let's go to you next. John Thomas from NADHedgeFundTrader.com. John, is this your first time on the show?
Been a few times before. I try to limit myself to once every 2 months, or I have too much fun.
Oh, okay. Well, this is the first time that I remember you on the show with me hosted. John Thomas is with NADHedgeFundTrader.com, and he's in Switzerland right now. Is that correct? Looking over at Italy.
There's the hiking map for the Matterhorn.
Oh, cool.
Wondering where I am. That's the Matterhorn right there.
Sweet.
I trade from all over the world. This month it's Switzerland. Next month I'll be back in San Francisco, and after that Incline Village in Lake Tahoe.
Have you been on Pilatus yet since you've been there?
Have I been up on what?
Mount Pilatus.
I have, actually.
Cool.
I try to do a different mountain every year.
Gotcha.
Just to stay in shape and keep on top of these markets. I published the Diary of a Mad Hedge Fund Trader. We've been at it for about 10 years now. We have a daily trade mentoring newsletter, which we market online, and we have an average of 38% a year.
Okay, you broke up on that last part, at least for me. What was your... Looks like he got frozen. That's okay. Let's go to. We'll come back to you, John. Don't worry about that. Let's go over to Lance. Lance Ippolito over at AlphaShark.com. Tell us a little bit about yourself for those of us who don't know you, and tell us a little bit about AlphaShark.com. John, we'll come back to you in 1 second.
I'm Lance Ippolito. I'm a CTA. I'm the president of LAI Capital Corp. Basically, what I do is private one-on-one trading coaching for individuals and also consulting for investment funds. At AlphaShark, I am a moderator. We call it a trading educator also, where we have weekly webinars and a live trading room. Our bread and butter is unusual option activity. I do trade futures there. We have earnings traders, option traders, stock traders, and also futures traders. And it's a great live trading room with over 200 active members every day.
Cool. Okay, Glenn Thompson, veteran of the show. Tell us a little bit about yourself for those of us who don't know you, and tell us a little bit about PacificTradingAcademy.com.
Sure. Thanks again, guys, for having me. And
Glad to have you.
I've been with Pacific Trading Academy now since the beginning, almost, let's see, going on about 16 years, and we're primarily coaching, mentoring. I have worked with all types of investors, beginners, experts, everything in between, options. I pretty much teach basic technical analysis 101, and that's what I do in my own trading. We currently don't have any trading rooms, but we have some of my coworkers have run trading rooms, and we're trying to possibly look into doing something like that, maybe in the Forex side. I do a lot of Forex in my own trading. In the E-mini. Yeah, basic counseling and coaching is what I do, and then I'm an advocate of the technical approach, and that's kind of the mainstay of my investing.
Yeah.
Cool. For those of you guys who don't know me, Dave Landry from TradingWorks.com. I am a stock trader and I guess an educator too. Lance, I was a CTA for 14 years, but then I came back over to stocks, and I never really left, but I just prefer stocks in general. I think you can only predict the short term when it comes to markets, but the real money is in longer term trading, so it creates a bit of a dilemma. So I think you can have your cake and eat it too. Trade for the short term. I'm slotted as a swing trader, but I will hold a piece of the position as long as it moves in my favor via trailing stop. I have a 21-page report, explains all this. It's on my website. I make you walk through the gift shop to get it. You have to go to the store, but it's at the bottom of the list, and there's some other free reports there that are pretty good. I have about 600 posts on my website, 1,700 YouTubes. I lost count. So I have a lot of content out there, so you can get started for free, get to know me, get to know the methodology if interested. So check that out if you get a chance. I also answer all my own emails, david@davelandry.com, so shoot me an email if you have a question on some of this. Cameron, let's go back to you. The question number one is, it looks like we've got a misprint in the report, but I seem to remember is, what do you think the market is going to be? Is the market going to be higher or lower by the close of Friday based on the S&P 500? And on that answer, rate your confidence by estimating the probability that you have correctly predicted this week's market's move.
Well, I'm predicting a pullback, so I believe that Friday we're going to be a little lower than we opened up here today. And I've got about a 65% confidence rating in that.
Okay. And then obviously the next question we'll ask some for you to develop that further. Let's go over to you, John. And John, you got cut off right at the end of your, at least in my mic, you got or my headset, you got cut off. So I don't know if you had any. You were saying something about your newsletter or something right towards the end.
Yeah, we send out a daily trade mentoring newsletter. It's basically global long, short, macro. We're looking for the best longs, best shorts in the world. And I'm betting the market goes down this week, about a 90% confidence level. And I did just put out a net short on SPYs just before this panel started. So I'm putting my money where my mouth is, and so are several thousand of my followers as we speak.
Wow.
We've gone too far, too fast. You know, I was expecting the market to go to new all-time highs, but not this fast. I think we get basically another correction in August, and then we just run for the rest of the year after that.
Okay, cool. And we'll ask you to flesh that out in just 1 second. Let's go to you first, Lance. Up or down this week, and rate your confidence on that.
Well, put it this way. I cannot locate the sell button. I don't know what it is like to sell. So I'm going with up. Confidence is about 90%.
Wow.
Just looking at the lack of economic data this week, it's pretty shallow. Therefore, I continue to think all the walls are down. We just trade higher. A lot of these tech names, their earnings are upcoming. I think that's pretty bullish for the market. I think earnings are so low that I think a lot of these companies will beat. I know, like Bank of America had earnings today. I believe Goldman Sachs is in the near future too. I think that can weigh up on the Dow. Goldman reports in the green. So really, I'm a giddy bull. And I just continue to really just buy the market. I feel like I'm buying at the top, and I'm just buy some more. But it's kind of funny, but I'm about a 90% confident that we just trade higher.
Yeah, it's kind of hard. It's a hard thing to do right now, but it's going up. Glenn, let's go over to you. Up or down, and rate your confidence on that.
Sure. Curious, ironic to what you said, Dave. In this case, for this question in this week, I find it easier to predict out 2 weeks. I wish I were talking next Monday. I think I would have a 90% confidence in my response. But I'm going to go with up by Friday, but I'm going to give it about a 65% confidence level. And the reason primarily is I've got a time point coming in July 31st, which is a Sunday, so figure the first week of August. August 1st is my next turning point and I've got about a 90% confidence pertaining to, or with an expectation the market will be sensitive to that and form a top. In the interim, we could see some swings. So I'm going to switch my, but I think I'm seeing such strength and persistency of trend. I'm going to say by the end of the week we're going to be higher, and I see that movement to the upside unabated through the end of the month, basically.
Okay.
So yeah, I'm tempted to say a pullback, but I'm just seeing such strength, and with the confluence of everything else I'm looking at, I expect we're going to just go on. But we may have a little pullback by the middle of the week, but by Friday we should be higher. So, but only 65% confidence.
What are your? I don't actually time the market. I follow the market, and I'm actually known as the trend following moron. But the question is, what are you using for your time points? Like, how do you? You said you're looking for a turnaround.
Yeah,
July,
August 7/31, July
7th.
31st, which is a Sunday, so figure August 1st.
Okay.
And in this case, I've got about 6 different cyclical components that are all kind of between 7/31 and August 1. That's why I have such confidence in that. So I am similarly a trend following moron like you. I look at what the market's doing currently, and I then juxtapose that with my next turn point that I projected. In this case, I've got a lot of confidence, so I start with a simplistic assumption that whatever the market's doing now, its current state, I'm working on the assumption it will persist till it reaches the next junction where I'm expecting a change of character or mode, and that in this case is out. What is it? 2 weeks from basically today.
Okay.
So
Gotcha.
the market has been, I'm tempted again to say a pullback because we're overbought. We've been rising 6, 7 sessions now. It needs a pullback, but then again, it's a cliche. Do I want to get in front of this oncoming locomotive? So we might have a pullback midweek, but I just see clearly the majority of factors that I think are serving as catalysts for this market are bidding it higher.
Okay.
Yeah.
Hey, the great thing about moronic trades is most people are likely to understand them and therefore make them happen.
That's correct. Yeah.
Well, I see just the opposite.
Me, the guy with the short position, even I'm calling only for a 4% correction and then straight back up to new highs. The big surprise this year is the market goes a lot higher than anyone thought.
Well, the reason I got called that name was I think I was talking about sugar was a commodity back then, and sugar was going higher and higher, and this person was heavily short, and he was trying to outsmart the market. So he just said I was a trend following moron. But most of my clients seem to fight the market and seem to want to try to buy at a bargain, and those people who finally see the light, they become more of the trend followers eventually. I said you can only predict the short term when it comes to markets. I think predicting this market at this juncture is not that easy. Some people misconstrue that to think that you could always predict the short term, and you can't. If you could, then you'd just be sitting on your boat somewhere, and that's all you would do. I do think we are overbought. That does have me concerned, but as a trend follower, as long as it's going higher, I'm going to have to go with higher by the end of the week. And I don't have much confidence in that. I'll maybe give it a 50-50 chance of that happening. So, and I'll flesh out a few things that I think there's always something to worry about, and I'll flesh out a few of those things when we get to the next question. Speaking of the next question, back to you, Cameron. What developing events? And let me read the actual question so I don't mess it up. But what developing events? Oh, he's got a specific reason. Okay, what specific reasons do you think the S&P will move? Whatever direction you said over the next week, I forget, higher, I think.
I predicted it's going to be lower on come Friday.
Oh, okay, all right.
But I've got about a 65% on that one there. I tend to agree with John, and I'm glad to see his high confidence that we're going to have a correction. But, I mean, we're wound up, we're overbought, and I again agree with John that we're not going to see, I mean, it's not going to be the beginning of the end. About a 4% correction makes sense, and then I think it's going higher by the end of the day. But we need to have catch our breath. We need to step back a little bit and regroup to go forward. I don't believe there's anything out there. It's a weak week for news. We're not going to have a lot of economic news out there. We do have the earnings, a lot of earnings now this week. Will be the first full week here of earnings season where we start getting hard and heavy. I don't think we're going to have any surprises there. I just think that we're just simply overbought, and we're wound up like a rubber band, and it's got to just unwind a little bit.
Yeah, it's kind of interesting. It's kind of a dilemma. It's going higher, but it's overbought. So overbought could always become even more overbought. This is kind of an interesting. We're all over the map here as far as confidence and direction, and this is a good point for someone who's more of a novice to trading to see that no one actually knows exactly what a market will do. You have to have a plan and have a stop in case you're wrong and follow that plan. Glenn, let's go over to you next, John. Let's go back to you. And everybody here, I forgot to mention, if you want to show charts, I'd encourage you to do that. If you just hit the share button on your screen, and you could actually, if you want to show us your charts and what you're seeing, feel free to do that too. But John, back to you. What developing events are you watching out for this week?
Well, obviously there's the Republican convention, which is probably going to suck all the air out of the room. Things tend to flatline during these conventions because the focus is on the convention and not on economic data, the markets, and so on. So that's one factor. We're still in the summer doldrums. The calendar is still against us. We're still in the middle of the sell in May period. We don't get a tailwind from the calendar until October. And we've had a lot of unusual events, terrorist attacks, coup d'etats, and a pullback in the bond market. So, next time, I think the market timing is probably more dependent now on the bond market than anything else. What caused this massive 8% run-up in the last several weeks is that the spread between the 10-year Treasury and the SPYs went up 63%.
Wow.
The sharpest move in history, by the way. And that's what's driving not just stocks, but everything. Gold, commodities, currencies, you name it. It's all being driven by that spread, which just, just rocketed, just in the last few weeks.
What are the two components? You said SPYs and bonds?
And TLT, yeah, it's the dividend yield on the S&P 500, which is 2.5%, and then the 10-year Treasury yield, which got all the way down to 133 at one point. And that means that SPYs, stocks are yielding nearly double what the 10-year Treasury is, which is unprecedented in history. Makes stocks look incredibly cheap. I'm sorry, but the cheapest they've ever been relative to the 10-year Treasury. And that's what's powering all these big institutions do this panic buying with record cash levels.
Gotcha. So it's the old where else you're going to go thing. All right, Lance, let's go back to you. What developing events are you watching out for this week that could have a positive or negative impact on the markets?
Event-wise, I don't think too much. The economic data. I know there's the conventions. I really don't feel like that will play a huge role unless someone comes out and says, I think biotechs are gonna prices are outrageous, and we see biotech sell off. But I think that's very minimal. Really, I think despite all the horrible global news going on with terrorist attacks, I do think the DAX still has some room up to run up to fill that pre-Brexit level. So therefore, I think the DAX will influence the U.S. equity market. So stocks go up here. Going kind of that inverse relationship between bonds, gold, and the U.S. equity market, we're finally starting to see bonds come down, gold, here I say come down a little bit, and money flowing into stocks. And also, too, a little correlation I found pretty bullish for U.S. stocks is, the market's really starting to discount crude oil. We saw crude, like today, for example, getting hit in the morning, but the S&P is just rallying. So just a lot of bullish signals out there, making me think the market is just going to grind up higher.
Yeah, one of these days, all that inter-market analysis is going to kick back in. The only problem is there's long lead and lag times, and Who was it said a market? I think it was Keynes said a market can stay irrational a lot longer than you can stay solvent. Glenn, let's go to you. What developing events are you watching out for this week?
It's similarly to the I think Cameron and the person who just spoke. I'm focused. It's not too much other than the obvious, the convention, and I'm not sure how to call that or how the market will respond, but emphasizing what I think Cameron said, looking at that relationship between the interest rate sector and the equities. Simply capital flow. I've got some of the people that I consult short the bonds. We've been short for 2 weeks. I'm expecting further nominal declines or declines in the nominal bond price, the 30-year Treasury. And so money coming out of that, it's got to come from somewhere, and it's going into stocks. From a capital flow relationship standpoint, and I expect more of that to come. It's not coincidence that my time point for the bond market, the 30-year, is August 3rd, so that's closely correlated with my next time point for the stock market, for the E-mini. Where are we trading in the ES? I think right before I tuned into the broadcast, we were around 2160, 2158 basis the front month in the S&P. My short-term overhead, I can see by the end of the week, to be a little more specific, 2170 is a price target I have. We break through that, and this might possibly correspond with my overhead zone of resistance by the end of the month. 2265 is a level I'm getting for the front month S&P. So, but in terms of specific events this week, the only thing on the near-term horizon, the convention starting today. What other factors? I don't know. I can't predict.
Gotcha.
Yeah.
Gotcha. Well, I ignore all news, and I just look at the charts. And we had a major sell signal last summer, and it's a pattern I call a bow tie. And the last couple times this happened, we had major bear markets, and this time so far we haven't. So we had it happen back in 2000 and back in late 2007. This is a weekly chart on S&P 500. And then we had corresponding buy signals, major buy signals in 02, 03, and in the bottom in 09. Now, this didn't work. It doesn't always work, obviously. Nothing always works. But what's interesting is we're up here at new highs, which negates this last signal. But the only thing that has me concerned, and again, there's always something to worry about, is that we could end up with a second mouse, what I call a second mouse signal. The early bird gets a cheese. I'm sorry, the early bird gets the worm, but the second mouse gets the cheese. So if we come up here and have another sell signal, I would be very concerned about this market. But so far, it's pushing its way higher. Just a couple of more points. I am concerned that the Russell 2000 really hadn't made much forward progress since 2013, and it still has some overhead resistance to go through, and so does the NASDAQ. And both of these indices, including the S&P 500, are overbought, especially over the shorter term. Now, the only other thing that has to be concerned, too, about, let's say, like the S&P 500 is, I think this Brexit thing was an interesting test for the markets because the market sold off fairly hard on this Brexit announcement, and it's the first time my phone has rang, even though the market's had some pretty big swings over the past year or so. By rang, I mean people, friends and family calling me up worried about the market. So I think the market is a little jittery, but it shrugged off the Brexit thing. And if I don't trade news, but if you were to trade news, as I often say, what you do is you wait for that post-news high to get taken out or post-news close, and then wait for the sell-off, and then buy when it comes back up. So on that metric, we do have a buy still working in the S&P 500. Again, it's not a signal I actually trade, but if you were to pay attention to news, I think you're better off fading the news and trading news. Very overbought. I think it's dangerous in general to buy stocks in here. I'd much rather be in the commodities at this point in time. Commodity stocks, that is, metals and mining, and still like the energies at this junction. I think we have big picture bottoms in those areas, and that's where I'm going to focus. Cameron, let's go back to you. And the question this week, I think we all touched upon it already, is let me read the actual question. And I think it's what impact, what impact, if any, do you think the upcoming RNC convention will have? And after that, the DNC from that doesn't sound nice when you say it like that. The Democratic National Convention will have on the markets.
Well, personally, I don't believe it's going to have much of an impact at all, if any. the bottom line to that. I don't have a whole lot to say about it unless you want to get into a political discussion, which we probably don't or shouldn't at this point. But no, I don't think the convention is going to have a whole lot of impact. We've heard both candidates talking about themselves for the past 6 months, and we're going to hear more of it this week.
Yeah,
that's about it. So I don't think the conventions are going to impact the market. I think all the other factors that we've all mentioned here today are going to have a lot more impact than the convention. Now we get down to the elections in November. That's when we could see some impact.
John, before I ask you that question, since you're overseas right now, what's the vibe over there about what's happening politically in the United States? Just kind of curious.
Well, virtually every European feels that if Donald Trump gets elected president, we will have a Great Depression and then World War III. And because they're not in the United States and not exposed to his daily commentary, they're afraid that the chance of him getting elected is about 50-50. So that's the European view. As far as the convention this week goes, I have a prediction to make. I predict Donald Trump will not say the Dow is going to 30,000 this year. And because he's not going to say that, I think we're just going to get a big yawn. And, when the news goes silent and you've had a market that's gone up nearly 10% in 3 weeks, it's overbought in the extreme and you want to take a rest. So that's why I put on the short position.
Gotcha.
And, the conventions really have no stock market impact, largely because they happen in the summer. But I think once we get into the real main election, then Hillary's lead is going to widen, and that is stock market positive.
Okay.
And by the way, you may notice that the market has gone up every day since the FBI gave Hillary a pass on the email issue.
Okay. So when you said European thinks it's going to be 50-50, you think those numbers are high? I'm just curious.
Yeah, I think that once we get through the debates, that Donald Trump's poll numbers are going to dramatically worsen.
Okay.
And Hillary will run out ahead, and the market will love that, and that'll give us both a pre and a post-election bull market, and that we're going to end the year on the highs.
Okay.
Well over 2,200 in the SPY and possibly as high as 2,300.
Okay, Lance, same question. What impact, if any, do you think the upcoming RNC convention will have, and after that, the Democratic National Convention will have on the markets?
As far as the RNC, I was actually watching some television this morning, and one of the topics that was kind of on the back burner was the economy. I don't even think we'll see a focus on it in the whole RNC with all the other issues going on. So
right.
I think that's pretty discounted for the market. We won't even
what
see
are they going to talk about? How much the stock market's gone up?
Yeah, exactly. I mean, I don't see Trump coming in there or any speaker saying, "Well, look how great the market is." They're not going to. I doubt any commentary on the market. As far as the DNC, I think the only concern is if Hillary or one of these Democrats start talking about biotech and the drug industry. We could see a sharp sell-off in, let's say, biotechs possibly the day after that comment. But then I do feel like that's pretty rare. Just with all the other issues going on right now, I seriously doubt something major like that will happen. So, I'm pretty. I think just believe the political mess upcoming is just discounted. And again, I think it's just a mess what's going on. So.
Yeah, you won't get much argument here. Glenn, let's go to you. Same question. What impact, if any, do you think the upcoming RNC and then after that, the DNC will have on the markets.
Yeah, pretty much, ditto, the same. Common sense, my normal narrative thought stream suggests not much. So I'm kind of repeating what everyone else is saying. So that's my logical response. However, maybe this is going to be a situation, because there's not much going on this week, that I'm aware of that would create impute some volatility and something definite. Maybe that's a situation, something unexpected, maybe tangential to the convention. I don't know. Someone I talked to, at the risk of bringing some political ideas into the financial markets, I talked to someone and they were saying, well, if we have another terroristic phenomena in the next week, that's going to favor Trump, and that will improve Trump's chances of getting in. I think maybe the market might, in an absence of news, maybe the market might seize something related to the convention as a reason for being bid up, is I guess my response. But on the surface, I don't see anything intrinsic to the convention or what the candidates are going to say, at least this week. As far as the DNC situation next week, I don't know. One of the things, who is Hillary going to pick as a running mate? We know who Trump's going to pick, but again, I don't see a direct correlation, so I'm kind of hard-pressed. So I'm going to fall in line with what the previous speaker said. Yeah. It's kind of hard. It's hard.
Yeah,
I wish I were speaking after next week.
Yeah, it's not what you know that'll hurt you. It's what you don't know.
It's what you don't know. Right,
what
exactly.
you don't know.
Yeah.
I ignore all news, so I'm really not the person to really have an opinion on this. I think it's impossible to trade off of news. First, you'd have to predict the news, and then you'd have to predict the reaction. I always say if you could use news in your trading, then a lot more journalists would be traders. So I ignore all news events, and if anything, like I said earlier, there's two ways you can actually use news if you want to. It's not my style, but if you're shorter term oriented, much shorter term oriented, wait for like a pop, and then maybe look for an intraday reversal off of that pop. Maybe play an opening gap reversal on that news, and then bigger picture, like I just said, like when the S&P 500 took out 2,100 round numbers or whatever, that would be your buy signal based on the big picture news event. But again, I ignore all news. Your life gets a lot easier when you start ignoring the news. I was mechanically following a system for somewhat into currencies many years ago on a small account, which was a big mistake in and of itself, but that's another story. And he would call me every night because we were trading in yen, and he's like, Japanese Parliament's meeting tonight, and I'm like, well, okay, so it had nothing to do with anything. We were following a mechanical system, but your life gets a lot easier when you forget about all that. Okay, Cameron, let's go to you. New feature was added in while I was away. It's an idea of the week. You have a trading idea you want to throw out this week for everyone?
Yeah, I got ready this week. Last time I didn't have anything ready, but let me see if I can make this technology work. I put together a simple little an unbalanced butterfly, and this is, again, because I'm a bit bearish this week. And I would only suggest you do something like this if you're bearish. But this is on the spiders, the SPY, and I'm looking for this to move down a little bit. And of course, right in here, I don't know if you can see that. It's the 213 on the spider. And I've also got this is a July 29 put unbalanced butterfly with center point at 213, and then I put my legs out 2 points on either side. There's not a lot of risk in here. $61 if you're going to pick up one of these is your maximum loss with add commission to that, whatever your commission charges are. But you have some upside potential, and if we go beyond the 213 on the way down in the next 4 or 5 days, you're gonna run out down here with a little bit of profit. So it doesn't matter how far down. If this market really did roll over, you'd be okay. But if it just comes off a little bit, you have an opportunity to make as much as close to over $300 if you're one of those guys that hang on and try to max out everything. But that's my idea of the week for the bears out there that think we may have a little bit of pullback. This is just an inexpensive way to play that.
If you put on a trade like this, you put it on and is it like Ron Popeil's chicken cooker? Do you set it and forget it, or do you manage it in that there's a stop, or do you see that $61 as a sunk cost?
I look at that $61. This, again, it depends on what your trading style is. On something, if you're going to put 100 of these on, I'd probably be watching it. But if you're just getting a handful, I mean, my confidence factor on this thing coming off this week is only about 65%. So I'm not real confident on it. So this is what I'm going to throw out here that I can lose. You can put on whatever your risk is. 10 of these, you'd have a $600 loss. And forget about it. But then I would probably take it off. Well, I'd be watching the market, to be honest with you. I'd forget about it. But then if we fall in here prior to, where we get a little upside on here, I'd probably take it off. I wouldn't wait to try to pin it. But anywhere in this area here is where I'd be taking it off. And again, depending on how many you buy, take a few off and let them ride if we keep going down. You just got to kind of watch it. But this one here, something with a risk-reward ratio like this, I pretty much let it ride with a small position.
Okay. Yeah, a lot of moving parts with options, so that's the only thing I'd like to throw out there. For if you don't know what you're doing, then don't do it. But if you know what you're doing, then that sounds like an interesting idea. John, let's go to you. I think we already know your idea. Short the shit out of the S&Ps.
Well,
is that what your idea is going to be?
I'm miles away from saying short the shit. I put on a vertical bear put spread front month. Which is about as conservative as you can get.
Okay.
And then just a small 10% position, and if that goes 20% against me or costs me 2% of my capital, I stop out.
Okay. All right. So it's not.
This is not bet the ranch territory that we're in here by any means.
It's a high confidence trade, but you're not. It's not going to put you out of business.
Yeah, high confidence for a week, which means it's a low confidence trade, really. And that's all I'm trying to get here is just a quick dip in a secular bull trend that's 7 years old.
Gotcha. Okay, let's go to you, Lance. You have a trading idea for us this week?
Yeah. So going on the bullish camp that I am currently on, the trade that stood out to me recently, so we do a lot of unusual option activity, mostly in individual stocks, but I just have to pinpoint it out for an ETF, the XLK, the technology ETF. Currently, if you're looking at the July 29 options, the 45.5 calls have 85,000 contracts sitting in open interest. We saw July 12th about 57,000 being bought around 20 cents, and then again on July 14th we saw over 30,000 being bought anywhere between 28 and 30 cents. Now they're currently trading about 35 cents. They're still sitting in open interest. I do feel like it's a good play if you're looking to get long some of these tech names and you don't want to play them individually for earnings. I do feel like you could always go out to a low volatility ETF like the XLK, possibly just get long outright calls or call spreads. That is what really stood out to me that I'm looking at. We always do spreads for earning trades on individual names in the trading room, but if you're just kind of want to play that whole sector, I feel like XLK is a name to look at.
Okay, cool. All right, Glenn, let's go to you. You have an idea for us this week?
I put one together just in the last minute while in just a minute or so, and I'm primarily following derivatives. So maybe let me see if I can hit the screen share. Can you get? Oh, let's see. Wonder what just hit share and I can show you my screen. Is that how it works?
Yeah,
Dave?
just be careful you don't show us the wrong thing. But yeah.
Yeah. Okay. Can you guys see? I've got a daily silver. September silver chart. Can you see that or no?
No,
No,
I
not
can't
yet.
See. I mean, you do or you don't?
No,
Yeah.
don't see it. There's
All right.
a
Let's
button on
see.
the left side menu.
Yeah, I did. I hit the
Screen.
little it says screen share, and let's try it
Okay.
again. Hold on.
Yeah, then you just select the window you want.
All right. Let's see. Let's try it again.
Now, I'll tell you what. If you want, I'll share mine, and then you. You
Yeah,
can work
Dave,
on
I
that.
appreciate the assistance. Yeah, probably I'm not the tech savviest person.
Yeah,
here.
if you go all the way to the left, there's a little thing. You click screen share, and then click on the one that you want to share, and then it'll and then click share again. So while you're doing that, let me go ahead and get mine shared, and then.
I see. I got it. Let me bring it up. I thought I had it up. Hold on. Let me just.
Yeah, go ahead. I'll go ahead and give out my.
I may be able to do it here. Hold on. Now, let's see if I've got. I won't waste too much time.
No.
Oh, okay. Yeah, I think you have it for me. Is this a? Ooh.
No, that's my screen.
No, that's your screen. Yeah.
Okay,
so I hit the screen share on my left. Now, what's the next step, David?
You should have a list of different screens to share or applications, whatever you want to do. Because like I'm just sharing an application on mine to make it easier, but it should have a list of things.
Once you hit the screen share button, it should bring up another window.
It does, but it doesn't have it. Yeah, I see that, and it has share, but it has.
You might have to scroll down.
Okay, let's see.
To find the one you want.
Well, I may be absent the visual, but at least I can give you a verbal.
All right.
Yeah, I'm essentially, if you look at silver, where I expect we are in a fourth wave triangle, and so I'm talking the Elliott wave, if you look at the last 2 weeks of activity. And so what I'm doing, contingent on a breakout above the current price level to the upside, which I'm expecting about 70% probability to occur, I would just establish a long in silver. That's a directional play. I'm following and trading derivatives. If you're on the security side, SLV is an appropriate liquid, relatively liquid, ETF. So, I have it. Do you see it now, guys? Can you see the screen?
Nope.
Nope.
Let me try this. I'm hitting share. Google Hangouts would like to share the content of your screen with Hangouts. Choose what you'd like to share. Okay, I'm trying to get it into that area. Well, I'll do this for the next time, I guess. But yeah, essentially. Sorry about that. I wish I could.
I'll bring up SLV for you. SLV.
Yeah, SLV is
SLV.
going to be a good proxy or tracking. Yeah, if you look at just the last 7 or 8 sessions, more or less, it's not as finely structured on the ETF as it is in the actual underlying, but more or less, if you look from the top through today, it's more or less a triangular type structure, which I tend to correlate with trend continuation. We were long in part of the preceding move up, which I construe to be a wave 3. I don't expect the 5th wave breakout will be as far to the upside, but it's going to be 62% of, say, from this bottom, the bottom in April. If you see the bottom in April to, I lost the chart, but to the top that came in, if I take 62% of that and add that to the current price, that gives us a tentative range of price projections. So I think that's a directional play that might happen any day now. That's my trade of the week. Again, it's contingent on a breakout to the upside.
Okay.
Yeah.
I'm not a big fan of trading ETFs because they're more efficient. An efficient market, a lot of people cancel each other out. That's why I don't trade S&P futures, at least not anymore, or unless it's for like an S&G type of intraday trade. But in general, I prefer to trade more inefficient markets. And if it's an efficient market, I like it to be a really good setup. I like sometimes Forex coming off of major lows. I think can set up a decent setup. But right now, gold's been on fire, as you know. It's been a bumpy ride, and because it is an efficient market, it will be a bumpy ride. But if you look down here, we had a bow tie earlier this year, and that's again when the three moving averages come together and then spread out quickly. And notice on a weekly chart, this has happened, coming off of multi-year lows, and those could be pretty powerful signals. So what I would suggest is getting long some gold. I think you're better off in individual gold stocks, but I think it'd be a good trade to get long gold. Maybe if it trades above 130, that'd be a trigger, and then a stop around 120, and then a target of 140 for the initial area, and then after that, the sky's the limit. Maybe it'll go back to its old highs or something. I don't know. I mean, one day at a time. All predictions are about the future, and a lot of stuff can happen between now and then. But I think it'd be worth a shot as a trade. Fairly liberal stop on that, just to prove that you're nearly completely wrong, because it would come all the way back into this prior base. I like to, stop way down there. You know you're wrong. You have to get out of the way. And then I think 140 is certainly possible on the upside, and then from there, trailer stop. And you can't predict forever, but you could follow forever is what I believe when it comes to trading. So that would be my idea of the week. All right, Cameron, let's go back to you. Any closing thoughts? Anything you want to tell us about your new website? Or I guess it's your new email address.
No, not at this point. I will tell you that we are looking at a couple of different things. Maybe next time I'm on, I'll be able to share with you what we're doing. But like I say, at this point, it's been a difficult market, I think, for a lot of retail traders to be trading. But and the old saying, the trend is your friend until it isn't.
Right.
It's a tough one. But I'll come back this week. I am looking for a little bit of a pullback, and then after that, who knows? Although I do think at the end of the day we are going higher. I just don't think it's going to be this week.
Okay. All right, John, back to you. Any closing thoughts?
Yeah, stick with the long-term trend. It's up. And don't ask me what my 20-year forecast is. You'll probably have a heart attack.
All right, I guess that's what's your 20-year forecast?
Yeah, this is the hard decade. This is the decade where we have the demographic headwind. The demographic tailwind starts in 5 or 6 years when the baby boomers start dying off in large numbers, and the millennials finally start getting decent pay increases. The last time that happened was in the 1980s, and the market went up 10 times.
Well, millennials will have to do something before they get a pay increase, but that's, let's not confuse the issue with facts. I never thought I'd be one of these old farts, kids these days, get off my lawn, but good Lord.
It happens faster than you think, believe me.
What's that?
Becoming an old fart happens faster than you think. Watch out.
Yeah, I know.
Hey,
I think the 2020s are going to be a repeat of the Roaring 20s.
Oh, okay.
I think we're just entering a golden age, but you have to go to hedgefundtrader.com to find out why.
All right. Well, we'll take a look at that after the show.
hey,
Cosmo, you want to chime in with something?
I was just going to tell you that I'm technically a millennial, so I was born in '82. So.
I'm 88.
All right, I won't go there, girlfriend. All right, Lance, let's go to you. Any closing thoughts? Anything else you want to tell us about AlphaShark.com?
If anyone wants to check out AlphaShark.com, we do have, I believe it's 5 webinars a week now. I host a weekly webinar Saturdays at 11 a.m. Eastern Time. We also have a live trading room. If anyone wants any more info on that, feel free to join. We have, right now I'm looking at on my other chart, over 200 members online with a great live chat and screen sharing. And if anyone wants to contact me, you can follow me, Lance Ippolito, on Twitter, or leicapitalcorp@gmail.com. And again, I'm just pretty bullish right now. When the time is right, I'll be the first one to step and say, hey, this market's heading lower. I just see too much positive upside to the momentum with the German DAX retracing its pre-Brexit gap. I really do feel like the Nasdaq and Russell still have some room to run up to the upside to catch up with the Dow and S&P. So in the short term, again, I'm just pretty bullish right now.
Gotcha. All right, let's go to you, Glenn. Glenn Thompson of PacificTradingAcademy.com. Any closing thoughts?
Sure. Just one nuance of distinction. I think I previously mentioned, and kind of in accord with you, Dave, not really a fundamentalist. I'm primarily start my analysis with the technicals, but that's not to say I don't take into account events. It's just the order of interpretation. I try and put together a a technical based on a coalescence of all the technicals I feel are relevant. And it's curious and interesting and fun for me sometimes to conjecture, or at least attempt to, what type of fundamentals would be consistent and reinforce my technical plausible scenario. So that's kind of how I look at it. I'm looking at the charts first and whatever they direct me, and then interpret the events as they occur moment by moment, day by day. So yeah, that's my view. Another point I forgot to mention that I expect that could impact what we've been talking about. I do expect the Fed is going to raise interest rates. We're going to have a rate hike before the end of the summer. How that's going to play out, I'm not sure, but that's one fundamental I expect to occur for a number of reasons. I think the market's going to move higher, as I mentioned. I got a turning point on 8-1. I'm not sure how long beyond that. I projected out to September 20. September 20 might mark the end of the generic bull market that's been in motion based on my analysis, but I haven't projected out beyond that. But other than that, I do about maybe 1 to 2 webinars per month at PacificTrading.com. So again, we have various programs, and I basically do some teaching of, again, focused on the technical approach. So happy to entertain any questions on that. Yeah.
Okay.
Thanks again, guys, for having me.
Yeah, glad to have you. Again, Dave Landry, DaveLandry.com. I do a webinar every week. It's Dave Landry's The Week in Charts. It's 11 o'clock Eastern every Thursday, and we have a lot of fun. We don't take ourselves too seriously. I try to make technical analysis as interesting as possible, which I think is not an easy thing to do, but we do have a lot of fun and a lot of active participation. So feel free to join us every Thursday at 11, and then, like I said, I've got plenty of YouTubes out there, and those archives do go up on YouTube, so if you want to check out some of those shows, do that. And again, over, I think 600 posts on my website last time I counted, so lots of content, lots of free content to get you up and running. I think that pretty much sums it up. Dave Kosmitter, thank you once again for having me, and thanks you, Timing Research also, and then everybody here, and I'll let you do the wrap-up on those guys. But I really enjoyed the show. As I often say, I always learn something in these shows, and I think we have another good show in the can here. So, David, back to you.
Yeah. Thanks, guys. Great show. Just want to remind everyone you can go to TimingResearch.com, and you can download any of the past reports there, or view any of the past shows, including this one. The archive for that will be up in a few minutes. If you join us next week, Tom Essay, Mary Ellen McGonigal will both be first-time guests on the show. Ed Carlson, Fausto Puglisi, and Matt Buckley will also be back. And so just want to thank all my guests again from this week. Cameron Yost of TradingWorks.info, Glenn Thompson of PacificTradingAcademy.com, Lance Ippolito of AlphaShark.com, John Thomas, MadHedgeFundTrader.com, and of course Dave Landry of DaveLandry.com. Thanks, guys.
Thank you.
Thank you, David.
Thank you.
Thank you, David.
Thank you. Yeah. Great.